Apple's record valuation begs the question, what's next? Will the upward momentum continue, or is it time to cash in? Our next guest has studied the patterns and says a peak for the stock is still to come. Tom McClellan, editor of the McClellan Market Report, joins us now. Tom, great to see you.
Good morning, Morgan.
So I hear you've got some charts for us. Let's put them up and tell us what you think. Does Apple go higher from here?
It should go higher because that's the consistent pattern that we're seeing quarter after quarter. The first chart you should be pulling up should be look at what Apple has done each quarter over the last 4 quarters. And there's a relatively consistent pattern. Right before the big earnings announcement, everybody gets worried about it, and so everybody is too afraid to buy. And then suddenly the earnings comes out, and it's a wonderful surprise, and Apple price goes shooting up because everybody's suddenly surprised that it did so well. And the one anomaly was the first quarter of this year when we had that big short VIX squeeze that caught the market up and pulled Apple down. Otherwise, it generally follows this pattern that there's great trepidation going into earnings and then a great big upward surprise that usually peaks out about a month later. So going into early September, we should see the peak. And then as we get closer to the early November earnings release, if it follows a consistent pattern, everybody should be worried about what the next earnings is going to do and be too afraid to buy. And then they'll get surprised to the upside in November. The time to be worried about that is if we start seeing everybody bidding up Apple into earnings. Then you'll know that the game has changed and Wall Street's figured out the game and is trying to front run it.
So looking at these charts then, it seems like they're very specific based on the history here, that there are very specific times where it might pay to buy into Apple. What are those?
Well, right before the earnings, right when everybody's afraid about what the earnings is going to look like, and then you don't sell right on the earnings news, not historically. You sell about a month and a half in when everybody's at the peak of complacency. That's when you sell, and then you let the whole worry about the next earnings to start to develop. And Apple's a great long-term holding. It's one of my long-term holdings, so I don't trade it quarter by quarter. But you know, if somebody wants to look for the next entry point or the next place when they need to raise cash to put their kids through college or whatever, there are times in each quarter where Apple generally has lows and highs, and those can be modeled, those can be predicted, and then we can make plans based on that. But right before earnings is not generally the time to sell. That's the time you want to be buying.
So, Tom, are charts like weather patterns? I mean, you generally kind of like, oh, well, you know, for this stock, kind of like this region, it's generally, temperatures are generally in this range. It's hurricane season for this stock, but there can be changes based on that year's particular conditions. Is that how we should think of it? Because obviously there are things that throw these chart predictions off, right?
Of course, there's going to be rogue events that'll come along, but Apple has been remarkably consistent. Not all stocks will exhibit this same degree of consistency quarter after quarter like Apple's doing. And Apple may not be able to continue it for very much longer. Once Wall Street figures out the game like I've just illustrated for your viewers, maybe the game will change, because the more people who know the rules of the game, the more likely the game's going to change. But for now, it's been a relatively consistent pattern, and Apple is such an enormous company, it creates its own weather that when you look at a chart, what you're seeing is the vacillations of human emotions regarding the market in general or regarding the stocks in specific. Apple's larger than most countries, and so it's a market unto itself. And its regularity is something that we can tap into and harvest and put to our use. The regularity also shows up in the overall market, especially when we're in the second year of a presidential term, where we find ourselves now. And everybody in the second year is starting to worry about what the midterm elections are going to do. And so, especially during a second year of a presidential term, you see a big down phase in August and September, leading up to the climax of those worries at about mid-September. We're right on track for that. The third year that we're heading into is generally an up year. Exceptions include 1931 and 1939, when we were having the Great Depression and when Hitler was marching through Poland. Unless you have conditions like that, the third year is generally an up year. So we have that to look forward to, but not quite yet.